Web3 theme on fundraising, venture capital, and the whole environment that we're facing right now, and how we can provide actionable insights and all kinds of new perspectives to founders and people that are looking to get into the investment space. So I hope that you guys get a lot of value out of this today. Like I said, we have a wonderful panel here that we put together. A nice mix of fund managers, project founders, people with vast amounts of experience in different realms. So we look forward to hearing from each and every one of you, and hopefully your experiences can shed some light on some things that are very interesting, especially given the current circumstances in the market these days. It's a tough one, and we all know that having as much information is power. So without further ado, I would like to introduce the panel, starting with you, in Shirley, I believe, and then Warren Burke. He's representing Catapult. We've got Rodrigo representing Helion Ventures, yeah, and then we've got Ken. He's representing Gojira, Project Gojira, and then of course Jan from Acquire.fi, yeah. So what I'm going to do is I'm going to pass the mic around, and guys, if you could just take 1 or 2 minutes max to introduce yourself, your experience, your background, what you're working on these days, and what brings you to Bali.
Thank you very much. So I'm Frederic. I'm the CEO and co-founder of Insurely. As you can hear, I'm French. And why I came to Bali is for the NFT Bali, the investment week, co-founder week. And so we're building Insurely because I've been in insurance for 20 years, and insurance, it's a very classic and old-fashioned world. It's also a world which is very complicated to develop new products and where the claim processes are slightly complex. So we started from the fact that 2/3 of people don't pursue their claim for flight cancellations because it's way too complicated. The whole process, it's highly intensive, and there is a need to change that, and blockchain can help us and allow us to process the claims online automatically. So your flight is delayed by 2 hours and 1 minute, you get your claim paid. And that's, of course, only the beginning of what we're building at Insurely.
Thank you.
Well, thank you.
Hi everyone, my name is Warren Burke. I'm a bit of an entrepreneur. My background is in computer and video games, and then moved into Web3 around 2016. With my personal projects fundraising, we raised over like $10 million. We managed a project with a $200 million market cap. Moved into as a venture partner with Pacific-based capital, very traditional finance. Bit my teeth in the VC circles there. Joined Catapult Group, which offers a wide range of services like investment brokerage, advice to startups, a whole wide range of kind of financial vehicles there, and then came to Bali really to kind of battle burnout, and then just kind of decided to get back in the game. So that's why I'm here.
Awesome.
Hi everyone, I'm Rodrigo Barakat. I'm originally from Brazil, living in Dubai currently. I run a fund with 2 partners in Dubai called Helion Ventures. We focus on pre-seed, seed stage, Web3 companies in one of our funds, and basically doing real-world assets and lots of infrastructure. We only do equity, so like of course we do take some tokens if they come with equity, but we do believe that focusing on equity, especially in a newly minted industry like the Web3 industry, it's very important to show your commitment to long-term value generation. So. Yeah, we focus on emerging markets, so basically MENA, Southeast Asia, and LATAM. And we have a strong positioning in MENA now, and we're based in Dubai, but doing a venture studio in Saudi. The venture studio is our way to be closer to founders and help them grow. And we're pushing our venture studio model to Southeast Asia on the second half, and probably LATAM in the beginning of next year. So yeah, that's me.
Yeah, my name's Ken Aguino. I'm the CFO for ETH NFT project called PG, formerly known as Project Gojira. My background is in TradFi, so 20 years in the CFO space of an investment bank, mostly looking at equity derivatives, fixed income products, that kind of thing. Got into the Web3 space 2 years ago, NFTs maybe 18 months. And really what we're trying to do over the past 6 months or so is transition from being just an NFT project into something that's more and that can scale. And I think that's kind of the big obstacle that we've had. I'll kind of talk maybe a little bit more about it later, but we're kind of entering this journey of trying to raise. That's kind of why we're here and what we're going to talk about. Here for NFT Bali. Yeah.
Thank you.
Hey guys, my name is Jan. I've been in crypto from 2011. Was one of the main guys at Paxful, which I basically helped to scale to more than 4.5 million users, $20 billion in volume. Then I quit. Then I did a DeFi fund, scaled it up to more than $500 million assets under management. And now I'm building Acquire.fi because I think the fundraising space needs more decentralization. I work with fund managers, founders, new projects, old projects, and we're basically the only one doing M&A in very large fashion. We have more than 75 companies for sale. We have more than $200 million / 200 buyers in our pool of investors, and I'm here to basically help people like VCs and founders to basically pair them up and scale up a little bit. I live in Bali, but I do travel a lot. And yeah, happy to be here.
Super cool. Thank you so much. You know, I always forget to introduce myself, and I'll just do that quickly. My name is Matt Cook. As you know, I am the CEO. Where you guys are at in all of this, and maybe from yourself as a founder, are you raising? Have you raised already? What are you up to, and what are you experiencing? And I think that's from the trying to raise side. But then you guys as well, you professionally raise money for your fund, and it'd be interesting to know more about how you guys are going with that and kind of the ins and the outs given the current situation and what you guys are up against and kind of where you see the opportunities, specifically being based in Southeast Asia now and also the UAE. All right? Thank you.
So from my point of view, before raising, you need a very strong project, not something that will vanish into tears in like 6 months because you want to do quick money. So when we built in Shirley, the idea and our target, it's to make it, of course, step by step, but to make it big, reliable, and to become a real decentralized insurance company. Very interestingly, I have a company in Web2, in InsurTech, so it's a brokerage online. The response from the fundraising that we started a month ago, it's very, very different in Web3 than in Web2. I would say less conservative or more attractive, but so far we're looking for a total amount of 5 million, so 1 million plus 4, so there's 2 phases. And so far we got about 20-25% LOI or fund transfers. So it's very interesting how it attracts investors, and perhaps also because being on the blockchain and developing something decentralized make it global. So global meaning your marketplace becomes worldwide. So that's where I think and I'm not naive. I know it's not going to be that easy. When you talk to funds or Web2 VC, I'm sure they have their due diligences as well, but I found them maybe it's more modern. So it's pretty exciting. And we had a very, very good response, or at least warm up at NFT Bali. Yeah. Awesome.
Warren, you want to go? At least you're 25% there. That's awesome. Yeah.
Of the 1 million.
Sure.
So I guess there's 2 kind of answers, right? The first kind of answer of when you're fundraising as like a fund, there's very different mentality. You know, you're speaking to potential limited partners, you're speaking to family offices, to funder funds. At the end of the day, it's still a sale. It's just a large amount of money. But they need to make sure that it's very safe. And of course, the funds have to be returned because a lot of these people work with like FBO trust accounts, like for benefit of others, or different kind of financial vehicles. So it's a very different kind of mentality. I think a lot of the people here would really be interested in learning more about the kind of, how to fundraise as a startup, as a founder. It's a lot of phone calls. It's like 10, 20 phone calls or 20 minutes a day. You get one shot. You have to get in there, get out. And then at the end of the day, you don't chase the yes, because a lot of the kind of funds are still making their minds up. There's a lot of kind of hoops you have to go through. You have to make sure that your product is solid, your pitch is solid. That's why I'm sure everyone here is aware of the 10-second elevator pitch. You know, you meet some guy at a cocktail party, it's like, hey, I've got a great idea. You know, a lot of the business is kind of done outside of these kind of phone calls. A lot of the decisions are made afterwards. So you have to make sure that you guys have a solid project, solid use case. Rich Robinson, during one of the NFT Bali events, made a good comment. He said, Sequoia has this mantra of why now? Why should we invest in your project now? And I think that is absolutely fantastic, because a lot of people have a great idea. Maybe the market conditions aren't there. In terms of this whole FTX and these kind of like exposure, as I like to call it, I think it eliminates a lot of the bad players. It's really easy to raise money in a bull market, and someone actually mentioned a comment before saying that they think the VC model is broken. I disagree. I think the VC culture itself is broken. The model itself is very kind of sustainable. You know, other people kind of manage funds for other people. It's financial economy. It makes wheels go around. So in my opinion, you know, it's always good to look at projects kind of the root level, right? Is this going to be success? And another kind of mentor has always said, invest in the people of the project. My opinion in the past couple of years is this whole Web3 kind of experience has encouraged people to fund an idea or fund a concept and then never really deliver on the concept or whatever they've promised, right? They're getting the funds first. They get very cushy and cash in a $5,000, $10,000 a month check. They just don't really want to, you know, kind of publish the project. That's kind of my opinion. This whole kind of exposure thing with FTX, it's a good thing in my opinion.
Thanks.
I wouldn't say a good thing, but yeah, it's a thing. So it's surely a thing. I would say we're certainly going to look back and look at like Luna, FTX, SVB, Silvergate as like the big inflection point in the Web3 industry. I think that it's still very early days. There's a lot of misconception in the industry. I mean, a lot of people forget that Web3 is about like it's about a back-end disruption. So it's not as flashy as people think. And we still live in an industry that flashes like Bitcoin as a coin. So people don't even understand that Bitcoin is like an unspent transaction. So people don't understand basically what they're doing most of the time. And that's what leads us to Pepes and all these like bubbles. We're still talking about Pepes, right? We're like, I've been dealing with this industry for 9 years. And it's a bit sad to see all those bull-bear market cycles. And I actually we at Helion, we try to defy a little bit this culture that you're talking about, this VC model that tries to just like raise a bunch of money, deploy all the capital in a manner that is like almost statistical, right? If I invest in 100 companies and if like in 5 of them flip a profit, like I'm good, right? Because like it's a symmetric kind of investment. But for me in my humble opinion, that's so bad for everyone, because like all of this money that was lost, let's say, in the other 95 companies that could be used for the development of the industry and for people who actually are working because of their dreams, right? Not only because some of them are not really too much into the industry, but they're putting like genuine work there. Like they're putting their lifetime, their life savings sometimes. So it's hard. It's very hard to give no's, right? Sometimes it's the hardest part of doing VC is just to give them no's, right? But it's very exciting and exhilarating when you do a yes. And I have a yes case here. I have like Borrowing. I know Borrowing is my good friend from a long time ago, and now he's like doing Acta Real Estate, which is like a fractionalized real estate company. And that's the reason, that's the one, and that's the reason I'm here in Bali, actually. He's just launched his project, and is a great example of how to build a team, how like a seasoned entrepreneur has jumped into Web3, he's doing great things. And I think that the whole Luna, FTX, they will keep happening until like not only the investors, the founders, and the audience, the users themselves, really understand that they have to do their own research, they have to do their own like due diligence, they have to be diligent themselves. That's how you invest money, right? You see crypto is still like a gambling environment. A lot of people doing like 100x leverage, a lot of people doing Pepe, losing their life savings. So like as long as we still talk about those things, the industry is not going to move really anywhere. So this is like our mission is basically to try to bridge the gap between institutional and, let's say, disruption. So basically That's why we focus in like infrastructure, real-world assets, tokenization, and more of this like banking 4.0 kind of thing, which is things that we know they're going to last. And we commit to equity because like we don't want to have tokens, and in order to flip a profit for LPs, I have to dump the tokens into the retail's head or into my own users. That makes no sense, right? So like all the conversations I have with my investor peers, it's like actually usually a debacle, and I usually have the like more polemic position because they're all talking about how they done like 100x, 1000x in a token. Okay, what value have you added to the whole Web3 rhetoric, right? So it's hard. I mean, it's very hard to educate people. And when you see that we're in a world that we live in this attention economy, right? So people don't really know who to follow. There's a lot of like people just capitalizing on attention and just throwing a lot of like bullshit, if I can, sorry to say that, but I mean, a lot of bullshit. Yeah, okay, thank you. I really appreciate the support, man. And even Luna, right? Let's take Luna as an example before I pass it on. Like, I don't think the problem with Luna was Do Kwon at all. I think the problem with Luna was people never read the white paper. So the risk was always there. If you read the white paper, you knew that the whole thing could like fall into a death spiral. So like if you didn't read the white paper and you wanted to flip 100x profit or tattoo Luna on your arm and like, I don't know, the things like that, I mean, it's your own problem, right? Like, it's not my problem, and it's bad for everyone. There's a lot of money that we lost, a lot of people that actually are never going to invest back in the industry or maybe lost interest there, so it's bad for everyone. But I don't know. I think we're going to be discussing a lot of things.
Thanks for that,
so.
yeah.
There you got it.
So I think, no, not working? Working? No? Can you hear me? Yeah?
Very close. Maybe try that one?
Yeah, try that one.
Yeah. How about this one? Yeah. So I think no question, market's tough. And we wish we had started our raising journey a year and a half ago. But there's still money out there, right? Valuations might not be what they were, but I think for true builders, true founders, with the right sort of partnerships, the money's there, right? So I don't think that's really a problem. The approach that we've taken and what I think events like NFT Bali facilitate is building relationships. So I think that's kind of the approach we've taken on this journey starting 6 months ago, was really building these relationships with VCs, right? How get to know each other, how do we offer them value in different ways before we pitch them anything, right? Before we ask them for any sort of money, like, you know, get to know each other. Like, who are you? Who am I? Like, build up that trust, that relationship, and then maybe in the future, if something works out, we can talk. So that's kind of how we've started on this process, and I think it's kind of getting us there. So,
Awesome, thank you.
Can you hear me?
No. Let's put this one in.
Yeah, so we actually were hit by 3 Arrows Capital and FTX. I was very close with them. So 1.5 years ago, we started our fundraising. We were supposed to raise more than $7 million, but eventually when 3 Arrows Capital went down, which was our lead investor, we had to basically do everything from scratch. What does it mean? I had to go pitch to more than 300 different VCs, got 290 no's, but I never gave up, and basically just kept on going. And I think what's happening with the VC world at the moment is that there's no leads anymore. Usually there were a lot of leads, like lead investors, and all the VCs were asking like, hey, who is your lead? Who is your lead? Who is your lead? And I think this year that's actually changing, which is actually very good, because VCs and hedge funds and other angels are starting to do their own due diligence. What have we done differently? So we help basically companies to raise. We also help them to sell. We do data mining. We do outreach as a scale. What does it mean? It means that we actually send more than 1,000 to 2,000 emails a day. Like, if you want to do this in a very large scale, you cannot do it alone. Of those 2,000 people, or let's say 2,000 emails, we send around 10,000 in a month. Maybe 100 answers, maybe 50 are positive, but it's very hard. But for people that are raising at the moment, as you said. You have to have your deck in a very good shape. You only get one chance. You better train your pitch as much as possible. And also, like you said with partnerships, partnerships are very crucial in bear markets. I've been around from 2011. I've seen it all. And I think one that makes a founder very good and a project good is that if they can leverage as much as possible other projects. Because if you can leverage as much as possible other projects, you get a community. If you get a community, you get this inner circle effect, which is very popular in crypto. And I hope in the future that this inner circle, that you have to know some different people to get money, I hope that will basically go away. And we will be more open. And yeah, I think it's been very challenging, but don't lose hope. Be ready to get a lot of no's. And yeah, keep training your pitch. That's it.
Awesome, thank you. While we're down there, could you just share a little bit more about how Acquire.fi, because I read your deck, and this is a solution for crowdfunding, right? And you've kind of navigated the legal frameworks and jurisdictions in a certain way.
Yes.
It's very interesting to understand how you can achieve this.
Yeah, for sure.
Yeah.
So we've been actually trying to get a license now for 1 year. We saw what was coming in Europe. We saw what was coming in US. We saw MiCA, for example, a European restriction coming up. So we have a license now in Switzerland, which is a self-regulated organization, which basically means that we can fundraise for anyone else. We have a crowdfunding license coming up in Cyprus. That license has been taken like 1 year to get. And I think other founders here, so we talk with a lot of tier 1 funds. We talk with a lot of exchanges, Kraken, for example. All they look for at the moment is risk-free investments. What does it mean? It means that basically you have to have a license, you have to actually know what you do with your team, and if those are correct, I think you have a very good chance of getting basically funding. Okay, what does Acquire.fi do? We are basically building an ecosystem with different founders, VCs, hedge funds, family offices, and a marketplace where people can list their different startups, and we do help funds to locate different ecosystems, and we work with also layer 1s. In short, we are an ecosystem for raising capital, both from the early stages, like seed, angel, and so forth, and then we have founders that have been around for 4 or 5 years and they want to exit. But again, there's this problem in crypto. You have to know the inner circle. What if you don't know the inner circle? You don't have anywhere to go. So basically, we're trying to open up this fundraising for everyone, and especially in M&A, which is a very unknown thing in crypto. Yep.
Awesome, thank you. You mentioned lead investors, and I was just curious to know from a fund manager's perspective how that paradigm is changed, and if it has, if you're seeing more lead investors come out of the UAE, or if you're seeing more come out of the Asian kind of regions of the world in comparison to what's happened in the US right now with the Silicon Valley, for example. Do you think that we're going to be looking to these regions of the world these days for more lead investors?
Yes and no. I politely disagree. I think that we need more lead investors because the thing is, like, most part of the people, they are lazy. Okay, they will not do due diligence. They would not have like an automated deal flow pipeline. They would not have a proper like scoring matrix in place. They don't have standards. They are cheap. They don't hire analysts. So this is like, if you dig deeper into how the whole thing works, there's like, I would say 95% of the people that call themselves VC out there, they're just investing. It's like they're family offices, right? These guys as VC, they don't have a proper fund license. They're not like experienced investors. They're not like let's say certified investors. They haven't been into the equity field before. And now that most of the VCs in the crypto space are people who actually flipped a lot of millions of dollars flipping JPEGs, like they call themselves VC. So this is hard because it's like So this is hard because we get confused, right? And I think that everything we can talk about Web3 is going to change a lot. It's early days. So this is like the way we see things working out right now, we should not take that as a reference. I see everything very differently maybe from the guys here. Like I have a very simple and straightforward like opinion to give whoever wants to jump into like a founder position is build a good product. and we'll fund you. Like if you're pitching 1,000 VCs and you're getting 900 no's, I mean, there's something there, right? It's like it's not the 900 people that can tell a good project from a bad project. And I've got like an advice. I was lucky enough to have like good mentors in my life and everything. And I got one advice from one of my mentors that is like ex-SoftBank, Spirit investor, and said, go to these conferences and look for this like weird guy in the corner, right? That's not talking to everyone. There's not pitching anyone. He's not capable of doing it because he's good at building a product, right? So if you want to invest into equity and you want to be part of an industry, you want to be relevant, go look for these guys. And that's our mission, right? We get a lot of pitches, of course, like we cannot find anyone. Some people are hiding out there in the corners of the world, and we just can't like reach out to everyone. But like this is our mission. Our mission is to find these people. Right, and I think that we need leading VCs, going back to your answer, that are actually committed to finding these people and spreading the word out for all the other VC/family offices that are never just going to actually have all the structure and the capacity, analytical capacity to find these deals. We need co-investors. It's very rare for us to actually take a whole round. Sometimes we do because it's like so amazing that we take the whole round. But we are leading the round for Acta Real Estate. We are leading the round, and most people come to UAE thinking of UAE as a big bag of gold. And I'll tell you something, if you want to raise funds, do not go to UAE. It's a lot easier here. People like funds, investors here in Southeast Asia. I don't know Bali that much. It's my first time. I'll come back, I promise. But I mean, I've been to Singapore a lot. I've been to Hong Kong a lot. I've been to all these other places.
We met in Hong Kong, yeah.
Was that?
We met in Hong Kong.
We met in Hong Kong and World Summit, yeah. And then it's a lot easier for you guys to raise funds in those places where the appetite for digital economy is like a lot more like, it's a lot easier to tap into, right? UAE, there's a lot of money, but weird money, right? And like the Arabic mentality, it's like they need to know you better. Like if you want to have an Arabic investors, a lot of people, I'm going to Saudi, bro. Like it's a lot of money in Saudi. Yeah, good luck with that, man. Like you're going to Saudi, you're not going to, like nobody's going to welcome you. And if you try to pitch a Saudi in the first time you meet him, you're probably never going to see him again in his life, like in your life. So this is like, there's a lot of misconceptions. But what I do like about Web3 and fundraising and all this stuff is that it's educating a lot of people, right? So it's getting a lot more people into the fundraising. It's more welcoming to fundraising. It's like easier to build a project when it comes to, like it's the founders are more excited. Right? Like the main difference between, I think, Web3 and AI requires a lot of specific technical talent, right? And for Web3, you can actually already use a lot of like pre-built standards and build a good product because we need use cases. So I'll just pass the word around.
Beautiful,
maybe.
thank you. Yeah, a few things popped up for me is that, as far as getting that feedback, pitching 1,000 VCs, and if you're getting denied or turned down by 900 of them, that's probably the most valuable feedback you can get so that you arrive at the product that you need, right? Not just thinking you have the product from the beginning. So I think, yeah, that's definitely something that is a reoccurring theme that everybody is kind of, obviously trying to share with founders. I'll kick it back to you as a founder, in Surely, decentralized insurance. How is it going as being a founder? Have you been having to reiterate or iterate based on feedback from investors? And I know that I've also heard, like you said, going to the UAE is not easy. I mean, the only reason the Silicon Valley VCs are going there right now is because they have to, right? And they're not really getting good deals and all that stuff. And I'm sure it's a bit forced having to build those. There's no ecosystem. Yeah, exactly. Yeah. So back to you. How is that process going? What has been your experience from day one as far as what you thought, and now, I don't know when you first started, but how things have changed and how you've had to pivot according to kind of what you're being faced with and told and recommended. Is it difficult to take suggestions?
Alors, Insurely decentralized insurance for real-world assets.
That's right.
Remember?
Yeah.
So actually, I mean, I have an experience in fundraising. I wouldn't say I don't know if it's successful or not. Anyway, it's an experience. So I've learned from the Web2 company, the InsurTech company I have, and I still have. I learned a couple of points were important and I missed in the other company. It's number one, be super well surrounded. So your co-founder or the co-founder team, it's at the beginning of a project what brings the credibility. If you think the guys won't be here in like 6 months' time, they don't like each other, and they have completely different visions, and they just like to raise money to spend it for private jets and or yachts, that won't work. Number two, I think be very well surrounded in our case, and that's why we did first with Insurely, is to build boards. So we have a strong board of directors, so who are experienced people, older than me, which happens sometimes, because in Web3 I'm already very senior in age. But having a board, it's also having people who had a great career and are able to tell you, be careful here, look at that, know your strategy is not necessarily right. Listening to your younger co-founder who's like, no, it doesn't work like this, like that in Web3, do your homework. Okay, great, you're right. And also having a board of advisor. And that's what I call the ecosystem. On top of having what I think it's a great idea, it's also knowing why you're fundraising. So I've been in the insurance industry for 20 years, and for 19 years and 10 months, I've been fed up by the process of the insurance industry. So that's as simple as that. My dream is to change that. My co-founder has the other part of the equation, so we believe it's a great project with a great potential. And did I answer your question?
Absolutely. Thank you. Yeah.
Perfect. Thank you.
Warren, I'll kick it to you, okay? How about this? So you have a lot of experience in GameFi and in gaming in general, right? And you've been involved in successful businesses that have exited or raised funds. What are you seeing now in the gaming sector, and where are we going, and what is important for investors to consider when they're looking at new gaming projects?
Specifically GameFi projects, right? Like Web3 stuff. I still think there's a lot of investments surrounding the GameFi, but that, to me, is like kind of its own ecosystem. There's a lot of moving parts in there. Some companies are guilds, which actually work on the play to earn on behalf of the players kind of thing. They kind of buy the assets and loan them to players. So it's still kind of a hot model right now. There's so many different moving parts in that mini ecosystem. It's really hard to determine which one that many people want to go into. What I think's missing from the GameFi industry right now is specifically good games. A lot of the people that were making games out there, they'd never built a game in your life, and I'd speak to them and talk to them and be like, oh, what's your favorite game? Oh, I'm not really playing any games right now. And then there'd be one project out of 100 that's like, oh, dude, I'm killing Mafia 3 right now. Or, I'm jumping on CSGO. I can't wait for the new Steam Deck to come out. And you can really see a big dynamic in terms of people that are working on a project as a passion, and then people that are working on a project because it's hot and they know they can raise like 500K super easy in Asia, right? I've never raised funds in the UAE, but I know that a lot of the things that they care about is infrastructure, jobs, things that they can give back, right? And GameFi project, to me, is not one of those industries where you're going to really give anything back. To design a whole tokenomics where you're essentially paying the players to play, like a lot of the games we have right now where like free to play or pay to win, you're exchanging time for money, right? You pay some money, you release a lot of the time from the game. But with play to earn, it's like you're giving that back. You're paying them to play the game in exchange for time. So it's a really weird dynamic that we're seeing right now. I really disagree with like the way Epic Games and a lot of these other large companies go in and saying we're never going to use NFTs. If you look at like Steam right now, right, CSGO skins, some of the really rare ones can go for several $1,000s. But the only reason they're rare is because Steam tell you that this is a hot commodity. Not many people have this. But if that was on-chain and verified, like the value would drive that asset up because we could then verify, right? The only reason people really want the Ronaldo pack in FIFA is because it's super rare and not many people have it. But how do we know there's nothing going in the background in terms of the database that says, oh, if you spend $200 on these packs, then you might get a chance. And when you spend $1,000 on the packs, your chance increases a little bit more. If this was all on-chain, the true true value of that asset would be determined, in my opinion. So I really think it's really difficult to determine how the industry is going right now, specifically with the GameFi, because you have game guilds, you have game developers, you have like games as a service, like things coming out. So it's really hard to determine that industry right now, even though it's in a bear market. But I do want to say that if you can raise funds in a bear market, that is a true testament to the quality of your project.
Absolutely. Yeah, thanks. It reminds me of, I've been speaking to a few gaming VCs, and I think you know one of them, but the need to have better games is definitely a big deal right now, and involving more AAA kind of gaming backed people with backgrounds in that space. Before it wasn't really a thing, right? It was kind of cool to not involve those people, but now it's more important, a need to have that. So I want to kick it to Ken, because Ken is part of a project that's quite unique, Project Gojira. And maybe you just give a little bit of the backstory. It's because it's quite unique in that you arrived at where you are through this really organic community building kind of platform that you've built with a global community that's here in Bali right now, many of them, and you're kind of harnessing the energy and the power of that and that loyal following to then lead to helping fundraise and do business development and figure out ways in which you can add value and barter and trade for equity or tokens and things like that.
Yeah, I guess to start with, I think our project really didn't have a lot of intention behind it. It's sort of the two co-founders came together, met on Discord, started talking, and said, okay, let's help each other out. So Jamie, who kind of did all the art for the original collection, had a passion for pixel art and wanted to launch a very small collection to start with, and said, I just kind of want to do this for fun. Let's see where it goes. All right. That initial collection was 333, and he brought in Sean, who's our other co-founder, who's, to be frank, kind of brilliant. And he had a lot of novel ideas on how to, I guess initially, how to help our community make money. And really that's kind of what PG and Project Gojira has become a lot about. How do we help and empower our community to make money, first of all, and that's kind of how we started. It's kind of migrated towards how we help empower them to become founders if they want to build projects. So we kind of developed like a launch pad sort of thing. And lastly, what we've been offering them is access. And when I say access, it's access to be able to invest. So the whole VC system and the ability to get access to the best projects in the world, to be able to invest in these projects and potentially get that huge 100x upside, that's closed off to the regular person, right? If you're a retail person, the way you're investing, you're buying into projects is you're going on to Binance, you're going on to some centralized exchange, or you're buying off some DEX. So what we kind of wanted to do was to try and democratize this process. And kind of through a lot of networking, talking to various different people, we found some communities who are trying to do this. And they've kind of developed this novel structure whereby they are able to, first of all, through their networks and, I guess, building these relationships with various VCs, get access to some of the best projects in Web3. So the same sort of projects that Sequoia are investing into, the same sort of projects Animoca are investing into, the biggest names in the space. And we don't have a lot of money, but we're crowdfunding from these communities, and we might be taking a 500K allocation, a 250K allocation, and we're able to kind of crowdfund from our communities to be able to fill these allocations into these sorts of projects. And when you talk about utility for an NFT, I don't think there's much that comes close. And when it comes to kind of what you're referring to, bartering for equity in different projects. And I think what we found is that there's hundreds, thousands of projects launching every day. And even if they have a good product, even if they have raised with VCs, they have trouble reaching a market. They have trouble scaling. They have trouble acquiring users. And I guess by nature of us being around for close to 2 years now, we've developed a following, we've developed a community, 200K on Twitter, et cetera, et cetera. So by partnering with us, by using our reach, we can help them reach a market, reach a community with whatever product they might have. And in exchange for that, they give us equity in their product or in their project. So there are quite a few different examples where that's happened, and it's happening more and more. But yeah, it's exciting, right, to be able to do these kind of things, offer these sorts of opportunities. And I think by doing this and by kind of putting our name out in the space as being a project that offers this sort of access, that's led us to this new opportunity that we're working on now, that is kind of giving us this opportunity to work together to acquire a project that has scale, already has 30K monthly active users, but didn't have the ability to reach VCs, to be able to fundraise. So via this partnership, we're going to do that together.
Fascinating. Thank you. So just tell me a little bit more. When you're bartering for equity based on business development, because you have a large community with all different types of skill sets that they can add value to your portfolio company, if you will, how do you take that equity? Like Project Gojira is an entity, or is it a DAO? And then how do the holders of your NFTs, is there an SPV? How does it work as far as holding the equity? If you don't mind me asking, if you don't want to answer the question, no problem. But it's fascinating to me as far as the fund structures, syndicated SPVs and traditional committed funds and DAOs and all of this type of stuff. How is this being done?
Well, to be frank,
Yeah.
We're a Web3 project,
Yeah.
and things aren't as formalized as they could be, right? So in a lot of cases, we kind of tend to work back asswards. So
Thanks for being honest, by the way.
We build it first, and then we figure it out after. Yeah. So we're kind of putting some of these legal structures in place, whether it's a legal entity in BVI, what have you. That's kind of where we're collecting some of these equity positions, for example.
Off the record, guys.
Yeah, we're figuring it out as we go along. I'll be honest.
Cool.
Yeah.
Thank you. So why don't we circle back to just kind of in general, the investment theme. And you mentioned utility. We're talking about theses and due diligence. And what today versus before are we looking at as far as, you mentioned Web3 is not going to be what we know it is now in the future. And same with AI. We're at the beginning of the beginning with what we'll look back on and kind of laugh at where we are now. But right now, what are you projecting into the future? What are you investing in? You're talking about ECTA, real-world assets, beautiful. You're also insurance for real-world assets. Seems like there's a lot of utility mentioned, and that's kind of the most important. And also, in addition to utility, what are the other criteria that is most important today than ever before? Especially with these, the valuations getting cut down and, projects doing down rounds. And just like right now, the pressure is on founders to really have a great product. But what else is important? Maybe I'll go ahead. Yeah. Rodrigo.
Well, I would start with the fact that I love bear markets to invest, okay? Because like in the bull market, everybody has like $100 million valuations and shit's all over the place, right? So it's like very hard to differentiate, find the good people. Everybody's like everywhere. So bear markets, you find the really resilient founders, the ones that are really committed to the project, the teams are solid and everything. So taking from there, we before we invested our very first dollar, we came up with this like scoring matrix of ours, and we backtested it with they say with the most successful projects that, in our opinion, following our investment thesis, were out there for us to test. And we understand that the most important thing is always going to be team, like who's behind that project, because if you look at the statistics, most projects, they go wrong for many different reasons, because you're talking about an industry that is in its early days, so everybody's like placing bets into something that's going to be or could be relevant or like useful in the future. So when you're placing bets and that bet can go wrong, you have to have a strong connection with founders, and you have to at least trust in some sort of way. Trust is a bad word in investments, but you trust that they can pivot, right? That if things go wrong, they're going to still be a team, right? And they're not going to look at you and say, you know what, I'm sick of it, bye. And then your money and your LP money is gone, right? This is terrible. So this is like what the first thing I think would account for like 50%. It's team, right? And then if you're looking at Web3 specifically, it's like mandatory to look at regulatory issues, right? Regulatory frameworks are very important. Like I'm a guy that I've been dealing with the industry for 9 years. When I saw the industry go through its like second big bull run, 2017, I thought that in 2018, after the crash, okay, this is STO time now, right? I was thinking to myself, silly me, right? This is STO time now. But no, then came like DeFi summer, and then came like the NFT frenzy, and we're still like moving kind of sideways there, like trying to avoid regulation in most of the times, which I think is wrong. I'll be very honest with you. I think avoiding regulation, going regulatory arbitrage, this is wrong. Like I've launched the very first stablecoin protocol in Brazil, 2016-17, and I got all of our bank accounts shut down because the banks no commercial interest. I wonder why, right? And we had to face this tough decision, right? Like, are we moving our company to like Seychelles, to Malta, or are we like doing something else? And I was lucky enough that in 2018, 1 year after, like the same year we shut down the project, Oliver Wyman, which is a big like consulting company, like financial consulting company, was coming to Brazil to consult for the local stock exchange and the central bank, and I was the only stupid guy doing stablecoin back then, and they like invited me over to like advise for them, and I shifted without knowing that I was going to do it, because I was still like attached to the ideologic like background of crypto back then, the cypherpunk like values. I shifted into advising for these regulatory agents, and this is very interesting because you realize that they need it more than we think, and this is more important for the industry than like, I don't know, trying to fight against it or trying to hide yourself against a Twitter account and just like, oh my God, I'm such a Twitter influencer, but like you don't talk to regulators, you don't help them out. So this is like, you mentioned before that a lot of people are coming to UAE, because why are they coming to UAE, especially VCs? Because the VARA regulatory framework was one of the very first ones to come out and say, okay, we want to be friendly to that. After the crackdown in Southeast Asia, after people had to flee Singapore, Hong Kong, after all this like frustrating experiences that all these people had in these different jurisdictions. So yeah, we look a lot into, going back to your question, we look a lot into team, the resilience that they can have, because it's placing a bet. You're placing a bet into the future that is unknown, right? And the reason, our investment thesis, we do some gamify, because this is huge, right? This is gigantic. And if you do games, then you can think about Saudi, because Saudi loves games. Like, this is the thing. You gotta, if you're raising money, you gotta understand with who you're talking to, because there's the thing, investment thesis. They have an investment thesis. I cannot make up my mind. It's not the fact that most people say, oh, sorry, we're not investing in your project. Oh, what do you have against me, man? It's like, what's the problem, right? Like, dude, you're fine. It's just like, I can't. It's not my thing, right? We do a lot of infrastructure, like protocol development, layer 1, layer 2, like software development tools, because we believe that that's what the industry need right now. And why real world asset tokenization? Why regulation? Because like the whole industry right now is like $1 trillion like market cap. That's nothing. That's less than Microsoft. That's very tiny. That's ridiculous. We're a very small community, right? And we think we are great, right? No, open up your mind, right? We're about to tap into trillions of dollars worth of assets that are portable to the digital economy, but they need the proper rails to do this. And who hold these assets right now? Institutions, high net worth individuals, like institutional grade level like investors. And all of these people, they are advised by a lot of people that just cannot tell them what, like to go cowboy. You know, like, oh, you know what? This looks great. Do that. No, they have to be compliant. You know, they pay taxes. You know, and like I hope we don't discuss DAOs here, because that's gonna go everywhere. If I go into DAOs, this is gonna get ugly. But like this is like, for me, it's like why we invest in equity and why we invest in like infrastructure level, why we're looking at real world assets, because those are the things that we believe that we can rely on to be alive in 20 years from now, because we don't have a mandate in our specific case. So I'm not looking at like closing the fund in 6-7 years and having 1 year to exit everything and pay back my LPs, because that goes against our like foundation values, you know. So again, just to wrap it up and pass by, like team, focus on the team and the product. If you have a good team and you make sure that your product, people want to use it, then you don't even have to think about marketing, growth hacking, whatever people are trying to sell you on Twitters and YouTubes and whatever.
Yeah. Thank you. Good stuff. Do you guys have any other things to add on to that? What the investment criteria might be in your eyes?
Yeah, I can tell you from M&A perspective. So it's absolutely correct. There's a lot of entities from US trying to get away. What are they looking for? They're looking for different licenses. Licenses are very hot. So if you have a VASP license in, for example, Hong Kong or Singapore, there's actually 160 companies at the moment trying to get a VASP license in Hong Kong. That's a queue. That's a big queue. And all these US companies, they're trying to get either a license or building an ecosystem or infrastructure. I think if you're a founder, you've been in the space for a long time, you have a very good chance of getting funding or getting a buyout, because the valuations are starting to be actually very good. Like there's big discounts. Those discounts are very lucrative, and I see a huge shift happening from going from the west into the east, and especially now when you don't know what the U.S. regulatory framework is. It's very daunting, and for example, doing any M&A there we're not touching U.S. And I think a lot of companies from here also have the same kind of mentality, like, and also with the DAOs, like you're basically having securities, which is kind of like in a very, very black line. And this is the first time the SEC has actually money. Like they just $100 million they put into it or something like that. Like SEC has actual money to go after companies. This is the first time ever. That's why there's a lot of companies getting away from.
Scary.
Yes, it's nothing to fuck around with. But yeah, as a founder, I think Bali overall, there's fantastic people. Singapore, Hong Kong, even Dubai. I think there's a lot of founders, and we'll see more and more people coming here.
Awesome, thank you. So you're based in Singapore. Ken, you're based in Australia, in Melbourne, right?
Yep.
But are you from Singapore?
Toronto, Canada.
Okay, Toronto, Canada. Okay, sorry. I was just wondering because, and Rodrigo, Warren, China. Warren, you spent a lot of time in China. It's interesting to see. We saw each other at the WOW in Hong Kong. That was quite a month for Hong Kong. I think March had 2 crypto conferences, and beginning of April had 1 more, the Hash Key, and it was thousands and thousands of Chinese people came from the mainland to kind of come in and just support and evangelize crypto almost, right? And it's very interesting to see the flip-flop almost, or the kind of the Chinese support now coming from China, and now Hong Kong is announcing the June 1st new regulatory regime, right, where crypto trading is all of a sudden legal. And during the pandemic, we had the opposite happen, where China pushed everything offshore, Bitcoin became mining, all crypto trading is still illegal, technically, but they're supporting, kind of passively Hong Kong. What I wanted to know is from you guys is what, Singapore, Hong Kong, Bali, where in Asia, in Southeast Asia, do you think is, you're talking about regulatory frameworks and, security and comfort. Where do you think it's, most promising, and where do you see the future?
Oh, I see the future.
Yeah.
Well, Southeast Asia is very exciting right now, right? I think I don't say that much because of my US friends, but like it's the end of Pax Americana, right? The world's going to this de-dollarization movement. Everything, like the power is shifting, right? And it's not shifting like a pendulum anymore. It's distributing, right? So you see like Dubai, Saudi raises. Saudi is going to be huge in 5 to 10 years. What they're doing there is like amazing to see. And what's going on in Southeast Asia right now is that like power that was once in the hands of China is actually spreading out because like there's a lot of money trying to flee China. That's the reality, right? I hope nobody from the Chinese government are like looking at us here, but like they probably
My wife's
are
Chinese.
anyway.
Be careful.
So, anyways, like I honestly think that this like duality between Hong Kong and Singapore is very healthy, and it's amazing because like I was there in Hong Kong for World Summit with you, and I saw their spirit in Hong Kong. And Hong Kong has a big advantage when it comes to ecosystem, like say when you compare it to Singapore, because Chinese people, they would rather go Hong Kong than Singapore, like 100 times, because it's, again, like polemic comment here, but like Hong Kong is now China. Right? There's like you've seen that everything the crackdown and like the umbrella kind of thing. I don't want to go there, but like Hong Kong is China. So this is like not only culture is more familiar for them, but like the laws and everything. So a lot of founders are fleeing mainly in China and going to Hong Kong because they can still speak the language. They can still like maintain their habits, their culture. Right? Singapore is more international, which is also very interesting. There's a lot of Western people in Singapore. And this duality, like I have many Singaporean friends, I have many Hong Kong friends. Whenever I tell my Hong Kong friends that I love Singapore, they hate me. Whenever I tell like my Singaporean friends that I love Hong Kong, they hate me. So I think that's very good. So I keep doing that because I keep like throwing gas in the fire because this competition drives innovation, right? Whenever like a regulator in Singapore feels that they're falling behind, they're going to try to do something new. The problem with Singapore is that like Temasek, the sovereign fund, was invested in FTX. So basically they have the same mentality as Dubai. Even though they are a democracy, right? And Dubai is like a kingdom basically. They both care for the same thing. They're very small. So the only one thing that they do care about a lot is like don't stain my image because I rely on that like international image. So they of course they took two steps back. They have to wait for it to like calm down a little bit. They cannot have too much exposure anymore. And Dubai regulatory framework, when VAR came out, like a lot of us like crypto like old people in crypto space, we were a little bit surprised at first because we were expecting something a little bit more friendlier. And they came out with these big fines, and you had to pay to get licenses and everything. But we also understand that a lot of people came to Dubai to scam people. So like Dubai doesn't want that, right? A lot of people came to Dubai because there's no taxes. So like, is that the kind of ecosystem they want to foster? It's not. So they have to also take a step back. They have to push away all the bad actors, right? So going back to Southeast Asia, like just this is the right place to be. To be honest, like in the next 5 to 10 years, Southeast Asia has a lot of advantage over other places in the world. There's a lot of like the consumer behavior here is a lot more like prepared, right? It's accustomed like to go digital. People play more games here. People like it more. People adopt technology faster. So there's a lot of variables here in Southeast Asia that if you put that together in one equation that you're trying to use to make investments or to found a company or to disrupt markets, there's a lot of advantages here. So I'd say I'm still young to the Indonesia market, but I'm very excited to what I'm looking for here.
Big time.
Very excited.
Yeah. Do you guys have anything to add about that? I just want to say also before we pass it to you, I grew up in Hong Kong. I spent a lot of time in China as well, so I am close to what's going on there. And also a lot of my Hong Kong friends, and some of them are VCs, have moved to Singapore. And even like since Token 2049 last year, that was an all-time high for Singapore. It was like Singapore was going to take over the Southeast Asia Web3 hub. And then all of a sudden now Hong Kong has become the most talked about, and Singapore has all of a sudden become less likely, they say, to take over that role. But I'd be very interested to hear from you, based in Singapore, and Warren, please chime in as well. But you seem to disagree.
Yeah, I mean, I've been living in Singapore for 21 years, so I have to defend Singapore. And I love Hong Kong as well, but I think Singapore has always a very, very cautious approach. So it's like if they don't know, they will watch. They will make some tests, small investments, because what Temasek lost in FTX is nothing. And suddenly they can completely switch out or switch off and reverse and say, okay, now we're going to become the hub of Web3. One of the and you see what happened with COVID. Everybody was criticizing Singapore, and then once everyone has been vaccinated in less than 6 months, bam, they reopened absolutely everything with no limitation. Hong Kong was a chaos. So Singapore, the power of Singapore, it's first all the very rich Chinese are putting the money in Singapore because Hong Kong is China, unfortunately, or fortunately. But also, I think they have this capacity to really, decide that now it's okay. We got it. We understand. We want this, that, and we provide a framework of pure stability. Because you don't know what will happen in Hong Kong. I mean, like democratic rights, protests. At least Singapore, it's clear. It's like that. If you follow, then it works. But nothing has changed. I mean, politically stable, money spark there is stable, is becoming a more and more wealthy and expensive city to live. But it's, from my point of view, I think it's not necessarily a bad place for Web3 on the long term, or mid-term, I will say.
Well, that's good. You're based there, so stay there.
I definitely really tensed up when you were talking about China and stuff there. I gave a TED talk in 2018 on blockchain and data security before Web3 was a thing. In stage of 5,000 people, influencers, government ministers, I was like, you can control your own data. These governments and companies will never track you. 2 weeks later, going through Hong Kong, just come this way, sir, asking me why I was in China. So that's why I just stone-faced then when you were talking about it. And it's funny, actually, we actually bit our teeth, I guess, with like the regulation and kind of blockchain aspect in stablecoins. I was working with the stablecoin industry, and I kind of moved that way towards studying for a master's in law, because seeing all of the ICO kind of scams and pyramid schemes in China led me to be like an advocate for regulation in the space. So 100% with you, agree there. That was kind of my comment at the beginning when I said this whole crash thing was a good thing, to eliminate and kind of push in and make things much clearer, like Singapore and I guess Dubai are making things, right? If you want to tokenize an asset, you need this licenses, you need this X amount in a fund in reserve. I really appreciate all of those kind of aspects from all of these different kind of economies. In terms of the Indonesian market, there's definitely a lot of forward thinking from the government. I mean, last year, they announced 0.1% tax on crypto transactions, right? So that is very clear cut. You want to do crypto, you want to own a platform, you want to do OTC, you build that 0.1% in, user never sees it. But on the other hand, it does make it easier if you're cashing out and you put yourself into a new tax bracket. The government very easily can say, okay, we've already identified this wallet through KYC, your tax bracket is now 0.5% or 1% or anything. So to me, Indonesia is very, very forward thinking in terms of these angles, right? And it makes total sense for Ector to be based there and tokenizing their massive real estate portfolio to make things very accessible for Grab drivers, for students. So everything here is, in my opinion, very, very fair. But we do need a lot of the regulation. We do need to make sure that anyone that wants to get into the space have licenses and these things. And to kind of come up on the answer that you were saying before in terms of what to look for in a bear market, people 100%, but one thing that we look for at Catapult is definitely the problem. What problem are you solving? Right? You know, this is why I was saying it's difficult with the whole GameFi thing. Like, what problem are you solving? Entertainment? Monetization? Like, where is the angle in that? So the problem for us is a good way to see if they're going to be around in 5 years. Are they considering, what is their exit plan? If someone turns around and says IPO or sale, like acquisition, like it's always like it's very bog standard. It's very, kind of on the face. If they turn around and say, we don't want to exit, like we want to grow, we want to scale, we want to adopt, the next billion users into Web3 or crypto, what's their mission kind of behind the problem? What drives them? Why do they want to solve the problem besides slapping a price tag on it? That's definitely one thing we look for. And to be honest, I really appreciate a lot of the things that Acquire.fi are doing in making like the M&A market very accessible. Not everyone has $1 million to kind of throw in these funds or family offices, etc. So I really appreciate a lot of access to the retail market that you guys are doing. But yeah.
Awesome. Yeah, that's great. Thank you. So how are we doing on time? Okay, cool. So we'll do questions, but I'm intrigued and I need to know more. about this DAO topic. I want to know why we don't like DAOs. And I know that DAOs are very messy and can be very difficult as far as jurisdictions and legalities and securities laws and all kinds of, kind of, I guess, gray areas that, especially if they're not really a DAO and they're not decentralized. So I'd love to know, as a traditional investor and as you guys that are running communities and kind of know about crowdfunding, what you guys all think about DAOs, venture DAOs, the pros, the cons, the positive guys first, and then you can shoot them down. Yeah, but go ahead, please. Yeah.
Yeah, I'm just thinking what to say here. So there's one problem in M&A that we are seeing, and that's basically we get all these different companies that want to sell, but they don't have any company infrastructure, they don't have any data rooms. We also had a DAO that was trying to sell out. From legal point of view, like, is it IP that we're selling? Is it the community that we're selling? There's so many question marks that come from the regulatory framework when you start thinking about it. I like DAOs. I'm involved in many different DAOs, gaming DAOs, whatever. But the regulatory framework is not there yet. It's very hard. It's very hard to understand, like, hey, how can you make a DAO that is very protected by legal rights? And I think there was a case in US where a DAO got really screwed up. And I hope that the regulatory framework will come. But I see a lot of opportunities with DAO. I like the idea of, like, hey, let's get a lot of basically DAO members and let's buy real equity from a company. That's very, very crucial. But I still think we're very early on. Hopefully there will be some kind of framework coming along, but they're a very, very powerful tool. And especially if you're a founder, like a new founder, and you don't have a lot of friends, join a DAO, join different communities, get friends. No, it's actually a good thing. Like, join a lot of different communities and DAOs, get opinions, and meet some new friends. Yeah.
Awesome. Thank you.
Yeah, just quick comment. So we're kind of also trying to do some DAOs within our community, empower them by allowing them to vote and build projects. The legal framework is hard. We're trying to, again, figure it out as we go along, consulting lawyers and looking at different ways of going about it. But the other challenge is cost. We don't have 50 grand to throw at something to build a Cayman Foundation or something like that. We don't have a massive treasury, and for these DAOs, we can't fund them in that way. So yeah, we're kind of stuck between a hard and rock place, and sort of trying to figure out how we can do this, avoid any legal liability for those involved, while giving them the power and the tools to do what they want to do. And yeah, it's not easy.
Great, thank you. All right, finish it off.
All right, I'll go before you lay into it. I'm personally not really a big fan of DAOs. I don't think that the solution there is fixed. There's two things I guess I would phrase it as. If someone can name me one company that doesn't have a CEO that is successful, I'll take a hard look at DAOs. And the second one would be, if you break down what a DAO is, decentralized, autonomous organization. I don't think anyone's figured out the first two until like AI comes in and manages the DAO entirely. And then decentralized, who makes the website, right? Who registers it? Who pays the server fees? There's always kind of some centralized aspect right now that we have. That's my opinion. But I do know that there are a lot of companies out there that are trying to solve this DAO situation, but that's just my thoughts right now today.
Thank you.
Okay, let's go. And I think I'm going to start with my personal opinion, okay? So like when I came across the Bitcoin white paper of 2011, I thought like, okay, this is magnificent. Like I was running a software developing company back then, but I didn't understand, pardon my French, but I didn't understand shit what was that about. But I loved the idea about a consensus protocol. The whole idea, I'll say, okay, this little thing here solves one of the biggest problems in humanity. How do we reach consensus, right? And it's trying to both automatize it and systematize it. So this is like amazing. This is interesting, right? Let me take a look at that. I wish I had bought Bitcoin back there, but okay, I didn't anyways. And that really brought me into it. That really got me into the idea of like, okay, consensus protocol. How can it grow? And then Ethereum came in, and like, oh, okay, this is growing, this is interesting, right? We can actually grow decentralized autonomous into like a world of decentralized autonomous organizations. But then you start realizing that there's a real world out there, right? Outside of the crypto spaces and the Twitter spaces and the forums and whatever. And then you try to understand how those two things communicate to each other, right? So for me, DAOs can really work if people understand that they are for like reaching consensus, right? For governance mechanisms. So, but 99% of the DAOs that approach me, they don't even know how the governance mechanism work, right? They try to, okay, this is a decentralized for a treasure thing. We're a company, we're incorporated there, but then we arbitrage to there, and like this is like a mess, right? And this is like, for me, my humble opinion is like, I've kind of very frustrated experience I've had after a stablecoin project failed. I tried to launch like a political party in Brazil as a DAO, and why it didn't work was because people didn't participate. So this is a big problem, right? When we talk very fondly and very highly of decentralization, but most people forget that for us to decentralize the world, everybody needs to participate. Oh, self-custody is amazing. Self-sovereignty is fantastic. But what about the risks? I personally hate banks, but it's very convenient to have your money in a bank, right? They have like FGC covered insurance and everything, which you simply cannot find in crypto, right? So this is something that I started like to really pick up in my mind. Like how are we going to make people participate? How are we going to make people actually make the difference and not just sit there and wait for it to happen? And I've learned something from that experience in Brazil. Why people don't participate is because basically they are ashamed. They don't want people to see that they don't participate. So they blame the product, right? So they say, okay, I'm not going to participate because if I don't participate, then everybody's going to know that I'm not like participating, and then I'm a hypocrite. You go, yeah. And what to do with this? So like we're fighting against ourselves. We need a cultural revolution for this to happen. And again, going back to leading VCs, we need leaders, right? We don't need evangelists. We need leaders that we can follow, not because they preach, not because they sell, but because that's how they behave. And they educate people to behave that way, right? And DAOs are all about that. Like DAOs shouldn't be like, like going to the legal framework. It's impossible to fit a DAO in a legal framework because at one point, not only like this is the point you made for me is the killer point. Is like it's more efficient to have a centralized organization. The topic is over. Like corporations, organizations, they're more efficient if run by centralized entities, in a centralized hierarchical model. So it's not efficient to have a corporation run by a DAO. DAOs should have a different purpose. It's like, okay, let's have like a higher level kind of governance mechanism where people can discuss, and from that we jump into a specific jurisdiction, comply with the laws. This is very important because, again, I'm very sorry what you say, but most DAOs that I see, they're either set up to avoid taxes or something worse, right? Which is like hide people from whatever. And this is a big problem. This goes like vertically against what was the original purpose of decentralized autonomous organizations. So that the big challenges when it comes to DAO to me, and DAOs for me are going to be the ultimate, let's say, horizon, right? When actually everybody understand that they have to participate. Try direct democracy. People are lazy. People don't want to participate. They want someone representing them so they can blame someone, right? It's basically that, like, oh, it was his fault. Like, but you didn't do anything. Yeah, but I wasn't asked. You know, there's like, and we run in circles and so we never evolve, right? So, yeah, well, sorry about that.
Awesome. Thank you so much. Yeah. I know everybody's getting tired. They want pizza. So maybe you want to go, Rob? Yeah. Sure. I think maybe I would like to hear from all of you one more thing, maybe some advice, and also,
Yeah, so look, what we're going to do, firstly, two things I want to say. Matt Cook, you're a legend, man. Thank you so much for bringing some incredible people together, some of which I know, some of which I've just met. Wonderful. Like, intelligent, insightful, spirited, love the energy, attitude, and the different personalities, right? But clearly a very esteemed panel. Also, I want to thank, so those of you watching at home don't realize that there's probably about 200 people here at Tropical Nomad, both here in the audience, also in the garden, and around about, I think about 3-4 years ago when we moved to Tropical Nomad, I remember sitting down with Itchy. Remember this, Itchy? And I said, look, what I can see is Speak Up Monday doing this, right? And we've done it a good few times, and this is another time like that. When I look at people like Ayu, who is a wonderful, wonderful person with Hardy. A round of applause for Ayu and Hardy, the team, the staff of Tropical Nomad, right? Right? It's really a family. And then finally, there's so many leaders here. So this whole, every week we're Speak Up Monday, every week, right? And it's an inspirational show, which is based and founds its roots in entrepreneurism and social impact. But behind that, we have a Web3 and a blockchain community of which Matt is obviously part. I see Kamazi, Arthur, I see Ty over there, I see JP over there, and so many more. And this is what makes Bali special, actually, is that we're able to come together, and there's so many different communities that we're a part of or in the middle of or the glue for, but it only works, as you said, when everybody buys in or gets on board or supports. So what I see here now, and S21, of course, I see you over there. So Catapult Pizza.
Pizza Monday, Bitcoin Pizza Day.
Bitcoin Pizza Day, right? So it takes all of us to do things like this. The idea came from me, but I'm not the guy, I'm here every week executing, but it's for the community, international community that comes in. That's what makes these times really, really special. So I just want to thank everybody who has come here tonight, everybody who's watching online that should be here, because we're going to have pizza, we're going to have a party, we're going to have fun after this. So you really got to come in person. But yeah, I just want to say that before we go any further. I'll come to you in a second. So thank you very much, Matt Cook, all of the panel, all of you here. We'll do a quick Q&A now because I think that's very important. And then after that, we'll have pizza and fun, and we'll just hang out. But any questions, raise your hand. This mic will come to you. And with your question, by the way, just direct it at a person, not the whole panel. We haven't got time. So direct it at a person and go straight to your question, right? No preamble. All right, before you do that, names, Matt, names of everybody so they know who to attention the question to.
Well, I have a question for you, Rodrigo. I heard about that taxation thing, right? That you support, like decentralization that automatically kind of means taxes, right? Like, right? To like you said, I heard at some point of like Indonesia's does 0.1% like every time a transaction happens, right? Like, I'm okay with that, but do you think it's okay for like the government to start taxing your crypto when it's inside and not being moved?
So if you hand the microphone back to, yeah, that's right, yeah. And this one's working now, so.
Okay, I didn't know about the tax in Indonesia. I just knew by Matt actually, but I think I think paying taxes, it's normal, guys, right? But if you don't pay taxes, try to grow accustomed with the idea that we should be paying taxes. If you don't like to pay taxes because the government doesn't know how to manage my money, and then democracies are all about that, or maybe you can ask your government to do a better job, try to help. A lot of things that I have a big problem with our generation, my generational peers, which is a lot of them love to complain, but do very little, right? So it's very easy to sit in a bar and have a couple beers and say, oh, F this government or whatever, but what are you doing? Are you helping them? Are you doing something, right? And this is like, we should actually always keep in mind of this, like, hypocrite, like to say, behavior. I don't mind taxes as long as they make sense, right? And as long as you can track this, it can be transparent, right? I think that's the basic for me.
Good point.
Great. Next question. The dad. Mamma mia. Yeah, we'll do this one, mate.
All right, this one also, okay, well, Rodrigo's already been done. Let's go, sorry, what's your? John, okay, so John. All right, now, one of the things that you guys were talking about was essentially investing, taking equity in an organization, but money's not the only thing that you offer, is it? Or do you actually have people that are going to support with various elements that will support the business to succeed? Is that part of your package?
Yeah, that's a good question.
Watch slides.
You got me.
It was the last one laughing.
You got
Yeah.
me. I'm still laughing.
Yeah, so we're actually introducing Business Corp as a service. What does it mean? We're trying to build up like a lot of different founders with different expertise, and how we see at the moment the fundraising aspect. If you don't have any advisors, if you don't have anyone helping you out, you can't succeed. So what we're trying to build out is basically an ecosystem with different founders, different marketing agencies overall, legal companies and so forth, because once you have a big ecosystem, you can reduce the cost. If you can reduce the cost, you can get more founders into this ecosystem. And as you said, like, legal is very expensive. But if you have enough, like, let's say, people, founders coming to you, and you can actually like starting to get them to the right places, you can reduce a lot of the costs. So we're trying to do that. We are not investing ourselves. We are just pairing up different projects, different, let's say, VCs, hedge funds, and different agencies. That's the short answer.
Great. Thank you. Next question. Put your hands up over here. So just while we're getting the mic over there, so have you got the forms for people to fill out? So make sure before you go, Tropical Nomad has a wonderful special event list as well. So make sure you fill it out as well. Maybe you'll pass that around and you can be involved.
Yeah, hi. Also, my question for Rodrigo. You said that you have to, yes, as an investor or as a company, you have to pay taxes, you have to apply to all regulations and so on. And where is decentralization? Could a decentralization exist with regulatory aspects? Because when you're starting to apply all regulatory aspects, you do it for the centralized entity. So where is decentralization?
Good question. I think the big challenge for the whole industry right now is how we bridge the traditional world and the decentralized world, right? So this is like, again, for me, in the far end of the decentralized spectrum lies people behavior, right? If people are doing their thing, participating, they're active, if decentralized like justifies itself, then it's easier to take them to the traditional world, make them understand, because the origin of their interest, their motivation is genuine. But the problem is, in the other side of the spectrum, there are governments. And governments, they're not being like a pain in our ass, for pardon my French again, because they want to, but they have to, right? So these two entities, they should be talking to each other. The most brilliant people that I know in the decentralized world, they like to hide behind Twitter's profiles. And whenever you try to take them to talk to government, they said like, I hate these people, right? And then whenever you try to take governments and make them understand like, oh, this is decentralization, this is a decentralized finance protocol, whatever, they say like, this is too complex. This is fooling investors, and most of them are fooling investors. This is the problem, right? So I think that those two worlds at one point, they're going to merge. But it depends more on people's behavior than governments, because governments are always lagging behind innovation. So this is the problem. How are governments going to tax decentralization? They don't tax decentralization. They tax like transactions that happen within a closed environment. So let's go back to my favorite DAO topic here. It's like whenever I have a DAO, this DAO wants to hire something, buy something. They have to buy something in a jurisdiction. And inside of that jurisdiction, there is like an entire like tax framework. And if they're not compliant, they're breaking the law. So there's nothing to do with decentralization. It's not that the government is against decentralization. It's actually that decentralization is not being compliant. So the big problem is like, I understand that there's like this abstract realm of decentralization on top of jurisdictions and whatnot. But they have to understand when they step into decentralizations, the game changes. And they're not competing. They should not be competing. With digital economies, we're not competing against traditional like real-world economies. We're adding an extra layer of abstraction. And they should learn how to communicate. So I don't have the right answer for that, but I think you're going the right way. And if maybe you keep asking the right questions, and maybe if you try to convince your most idealistic friends that hate governments that we should be talking to them, maybe that's a good way. That's the best thing we all could do. Right.
Great. So we've got a question for Ken, Warren, or our favorite Frenchman. So any questions for those three? Yep, one over here. All right, let me go across the camera over to you, or come inside. Good man. Thank you so much. So I'll just duck this under. All right? Yeah. All right. Your brother? Yeah, thank you.
Okay, it's not a really big question. Actually, it's a very little question. I'm a founder of a startup. Are any of you guys angel investors and open to having a chat?
Know a lot of them, sure. So we can definitely talk. Yeah.
Well, because they tell.
All right, like, you know what we're going to do? 10-second pitch.
You're talking to the funding.
I can do a 10-second pitch. Yeah, tokenization of e-commerce sort of type assets. I've got a product already underway, and I've got a meeting with Sony next month.
Very cool. Thank you.
Very fast. Mind the lights. All right, another two questions. One for Ken. One for my Frenchman. Anyone? All right, going once. I know these guys don't want to be on camera. I have a question. All right, you have a question for him?
Please.
Thank you. Yeah, 'cause I want to hear more from Ken as well, because I know Ken's got it.
We all have, like, insurance is a complex topic, right? And it's the same way we're talking about, like, how decentralization gets into that. I'm wondering how do you guys plan to target your product at institutional level? Because I honestly think that there's this opportunity to make individuals, if we're talking about decentralization, at one point we're all going to be like self-sovereign, right? I'm going to be holding my assets, right? So my question to you is, like, at the very long run, right, at the long tail of insurance like market, do you think that at one point that, like, individuals are going to understand the mechanics of insurance? So you think there's going to be they're going to be aware of how important maybe insurance is for like protecting their wealth, protecting their assets or something like that?
Well, I think if you come back to the roots of insurance, it's only a statistics. What you want, it's to cover a risk for a fraction of the price it will cost you if the risk happened to you. And you want to get paid for your claim at some point. So definitely, I mean, we're used to the very traditional insurance companies, and I'm not saying they're bad, not at all, but there's also a new market where new people, new market, new needs, micro-insurance, and at the end, of course you have a framework behind. I mean, you're not launching decentralized insurance like that. You need, of course, to have proper statistics, underwriters, but you can get rid of some of the, of course, extra cost and some of the regulation. You have to be regulated somewhere. That I completely agree. And I think, I mean, and that's part of our business plan or of our strategy. It's also to get, I will say, as soon as possible, the backup of a government. So to be backed up by a government body, so a country who will support this and say, okay, we're supporting now a new trend in the insurance growth or development. I'm not sure if that answers your questions, but I think to me, insurance is a statistic. It's just like if you pay to be covered, will you be paid in return if it happens? And I think that's what people want, and that's what people want faster.
Do you think there is an advantage in being decentralized and limit individuals?
No, I mean, I really love what Warren said, is like, we can be decentralized, but you have to be centralized somewhere at some point. There's always like, so decentralization is international, it's internationalization. So, but at some point you need to have a server somewhere, you need to have a KYC, you need to, it can't be like, you need to be, I mean, serious. But you can also, by being decentralized, target worldwide platform, marketplace. And some jurisdictions like Bermuda, Guernsey are already offering, for example, for art insurance, decentralized or global coverage. So then after, it's the country where you register that also make the difference.
Sorry,
Awesome.
before you go on, I just
Yeah,
want to
please.
answer that young guy's question who actually got up there and did the 10-minute thing. A lot of my investment friends, like and colleagues, they absolutely hate that, but that took massive balls. So good on you, Brew. Like, don't let anyone tell you don't try, right? Someone really much smarter than me once said, if I told you it's going to take 28 no's, yeah, to get to that first yes, how excited would you be for the first, 5th, 10th, 20th no? So never give up, keep trying, and as Rodrigo said, keep doing your thing, and if it's a good product, we will find you.
Beautiful, thank you. On that note, I was going to have everybody leave us on one piece of advice, and that's yours, okay? So just one line, one piece of advice to founders or people in the Web3 space in general. Please go ahead, John.
This is simple. Get friends.
Get
Really,
friends.
Really, like in my career, like the friends that I know from back in the days, they're still with me. The more friends you can have in this ecosystem, the more you can rely on them. And eventually, the friends that you know now, where they are now, they might be in some very big company in the future. And that's when friends are very, very, very important. So keep connecting, come to events like this, and yeah, keep grinding.
Awesome.
Yeah, I would echo what John's saying. So I think over the course of my 18 months in the space, anytime I've reached out to a person, anytime said, hey, you want to have a 15-minute chat, no one's ever said no, right? It could be someone I just randomly met on Discord, someone I met at an event, and everyone says yes. And I think that's why I love this space, because it's a yes space. Web 2 is a very closed ecosystem. You don't really branch out. Web 3 is the opposite. So that's kind of why I love it.
Thank you.
I think for people who want to invest or put money in crypto, always do your own research and keep in mind that investment is all about timing. So that's the basic for like who wants to have exposure to that. But to the founder side, I think is like keep yourself hungry. Like you gotta keep hungry. You gotta keep asking questions. Never settle to one idea. Never think that you're done, you're perfect. Never get frustrated because someone said, there's always learning in this no or whatever. So like keep growing. Try to find yourself amongst people that you trust and actually you trust enough to say no and you're wrong. When you're surrounded by people that actually are always like clapping and saying, you're right, go for it, you're amazing, be careful, right? This is the learning process. The industry is so young. Like, there's no way like single person could be absolutely right about anything. So just keep yourself hungry, keep going, keep asking questions, validate.
Good stuff.
I'm done. I already gave mine.
One piece of advice, if you start a business or you invest, buy an insurance.
There you go. I love it. Awesome. Thank you. Beautiful. Guys, on that note, I just want to wrap it up and say thank you all for coming. It's been a great show. Appreciate all of you guys and bringing your knowledge and wisdom here. I'm sure it's been valuable to the audience. And on that note, I would just like to say S21 and Off-Chain, our communities, the Web3 communities of Bali, have come together to celebrate Bitcoin Pizza Day. So on that note, awesome. So in the theory, in the spirit of loving Bitcoin, you know, and what it stands for, here we are to celebrate some pizza, and remember what Bitcoin is all about, right? And so this marks the day when Bitcoin was used to actually buy a goods and service, a good or a service, excuse me. So guys, enjoy free pizza. It should be available right now, and soon, I hope. Nicholas in the back, the pizza's on the table. Everyone, thank you very much. Don't forget to try some Bali Rainwater Core Culture Lab drinks, and have a good night. Thank you. Yeah, thank you. Yeah.